Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. It is May 21st, Wednesday. We're going to take a look at KBR Incorporated. This is out of the industrial sector. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. All of that really does help out a small YouTube channel like mine with the YouTube algorithm. A couple other things that would help. Make sure you're watching the videos to the end or as much as you can, and share with anyone you think that might find value in the content. And don't forget to drop a comment down below. Let me know what you think of KBR and what you think of the videos. And if you have any suggestions for future videos, go ahead and leave those as well. Really appreciate all the subscribers and viewers of the channel. The channel continues to grow because of people like you. Now this is the vested interest stock screener. This is the criteria we will be running through in this video. It must meet 5 of 8 to make it onto my watch list. If this was a company like a bank out of the financial sector, we would add in price to book with 1 being fair value. Don't blindly use price to book as with 1 being fair value for other companies outside the financial sector like banks. Use their historical average price to book, compare it to where it's at currently, and also compare it to other companies in the same sector. That 1 fair value is only really for banks and insurance companies. All right, back to KBR. Check them out at www.kbr.com. That's www.kbr.com. That is their homepage. Pretty easy one at that. And we deliver at KBR. We partner with government and industry clients to provide purposeful and comprehensive solutions with an emphasis on efficiency and safety. With a full portfolio of services, proprietary technologies, and expertise, our employees are ready to handle projects and missions from planning and design to sustainability and maintenance, whether at the bottom of the ocean or in outer space. Our clients trust us to deliver the impossible on a daily basis. All right, and this company on a much larger scale is very similar to companies that I use in my field, where we might go into a company and say, hey, we want to look at this building, see how much energy we use, how do we offset our carbon footprint, and then they would come up with engineering ideas, maybe adjustments to our HVAC. Maybe we partner with a solar farm, and pay into a certain amount of building out the solar farm, or helping to, like DTE helps us do, to offset some of our footprint by building those farms. They would give us a plethora of ideas. They would also look into the front end and see how much energy we use, what our carbon footprint is, and then, like I said, tailor a plan specifically for that building and tell us what we could do. Obviously, these are some of the things on a much higher level that this company does. It's engineering and a consulting firm. That's really what they are, right? For the government and big clients. Probably bigger than the company that I work for even. Now, the reason we're taking a look at them, down 5.89%. We are talking about KBR Incorporated. Closed out the day at $52.07 on the day. 52-week range as low as $43.89, as high as $72.60. Not quite within 52 weeks, 15% of a 52-week low here. They've got a little bit further to drop. I think it was around $50.47 and some change right in there. So really, under $50 would put them well within 15% of a 52-week low. Market cap of $6.753 billion. So small cap company here, a beta of 0.84, so typically less volatile than the overall market. PE ratio seems low at $17.47, though you would want to compare that. If you like the metric price to earnings, you would want to compare that to other companies in a similar sector like KBR. Earnings per share, EPS sitting at $2.98 per share. Earnings date coming up sometime between July 22nd and July 28th next month. They're in that window. Forward dividends, 66 cents. They are quarterly payers, divide by 4, though we will see that here in a little bit. Starting dividend yield of 1.19%. Ex-dividend date, June 13th. Looks like, so you've got some time. You want to buy that June 12th or before if you want the next dividend. And we've got a payout, looks like, in July on the 15th. 1-year target estimate, $67. So they do see some upside from where it currently sits, but not getting back to its 52-week high, at least according to Yahoo Finance, where I pulled this information from. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. To do that, we look at their 5-year dividend yield average of 1.04%. Compare it to the current 1.19, or over here, forward 1.19, same number. Since it is higher than their 5-year average, that actually speaks to undervaluation, at least according to dividend yield theory, though it's pretty close to fair value, slightly undervalued. Payout ratio is low at 20.64%, so the dividend does look safe. Got plenty of room to continue to raise that dividend, still pay down debt, make acquisitions, reinvest back into the company, and do other things with that remaining, almost 80% free cash flow. Dropping down, we do want growing free cash flow, so I like to look at that. Going back to December 2022, $325 million in free cash flow. 2023, it looks like it dropped down to $251 million. Back up in 2024, though, to $385 million. And the trailing 12 months, which includes, May and part of last year still. So keep that in mind. This does include 2024 numbers still. They're at $408 million, so it looks like they may have increased year over year, at least for the trailing 12 months. Seems like they're continuing to grow here. Repurchase of shares, $203 million pulled out in 2022, 2023, $138 million, 2024, $218 million, and trailing 12 months looks like they're continuing that trend, $313 million. But again, the trailing 12 months does include part of 2024 numbers. All right, jumping over to stockanalysis.com. This is another source I go to for information, and I do recommend more than one source so the information you're looking up is accurate and up to date. It gives you a back check to be able to make sure the information is indeed accurate and up to date. There are 7 analysts that have taken a look at this from stockanalysis.com. They call it a strong buy. Low estimate of $60. It currently sits lower than that, so if it came back up to their low estimate, that would represent a 15.27% increase in where it currently sits. Average estimate of $68.86 would represent a 32.3% increase in where it currently sits. And if it happened to hit their high of $84, that would represent a 61.38% increase. All the while, you could collect that 1.19, almost 1.2% dividend yield. Now, looking at statistics, I like to look at return on capital employed. I want 10% or better for this. They're right above it at 11.44. Earnings per share growth, EPS growth, I like above 5% forecasted over the next 5 years. 21.88, very good. Revenue growth forecasted at 11.02%, so they must expect quite a bit of revenue growth, and that's a very good double-digit number there. Quarterly payer, as we said, we'll wrap up their history here as we wrap up the video. Payout ratio, again, 20% range, 22.16. I think Yahoo Finance had them right around 20, so still in the 20 ranges, though there is a bit of a discrepancy. This is where you'd want to look for a different source. I just like to take the two of them and split it. Call it 21% payout ratio. Either way, very low. Lots of room to continue to raise that dividend. Dividend growth of double digits, 10.53%. 5 years of dividend growth. Buyback yield is positive at 0.93%. That's what we want to see. That means they are buying back shares. Not only are they buying back shares, they're doing it efficiently and effectively, buying back more shares than they are putting back into the market. If this was negative, that means they're issuing more shares than they're buying back. So even if a company's buying back shares, make sure the buyback yield is positive. Shareholder yield positive as well at 2.19%. They do pay out off schedule than most companies on the January, April, July, October timeframe. Going back to December 2022, paid out 12 cents. Raised that up March 2023 to 13 cents and some fractions of a penny there. March 14th, raised it up again to 15 cents. And then the most recent raise, March 2025, up to 16 cents and some fractions of a penny there. So consistently raising that dividend over time. And again, I like that they're off schedule. All right, this is going to be a quick video. That's good. Understand the business. Yes, they are a consulting firm, engineering consulting firm. So they are going to tailor a fit for you depending on what your needs are, what your project is, that sort of thing. So they'll pull all of the specialists together and tailor a package and a plan for you dependent on what you are looking at. And again, looks like the government and some big industrial firms are their major clients, and you can check out exactly who those people are if you go check out their homepage. Growing free cash flow, no. We had the down year there. Growing dividend, yes. Double-digit growth, actually. Very nice dividend growth on this one with a low payout ratio in the 20% range, so it's well under 75%. Dividend yield theory says they're potentially undervalued. It is not quite within 15% of a 52-week low. It needs to drop under $50, and I believe it was 47 cents per share. Return on capital employed is just over 10% at 11.44. Earnings per share growth was in the 20% range, smoking high. Very good. 6 out of 8. This one is on my watch list. I think I did a video on this back in 2024, 23, maybe a year or two ago. Interesting company. I don't know what kind of moat it really has, Maybe the government, working for the government and government contracts gives it a little bit of moat over other companies. Like I said, I use a company like this. Peter Basso is the one that I use. They're an engineering firm and very similar. If I needed them to do the engineering, pull together the architectural firms, and put together a project for me, which I've had them do recently, they would do that. They would get the design pulled together. They would get all the calcs for the engineering done. They would help me order the equipment if I needed that. They would package a plan depending on how much I wanted them to do or how much might want to do, me and my team do ourselves. They could do it turnkey, or they could do different portions of it. They'll even help us bid the jobs, help us pick out and select contractors to do the work, write those contracts if we wanted, the whole 9 yards, again, dependent on how much I wanted them to actually help me and do. And I would imagine they would probably, even for a fee, help me manage the job if I wanted. But same type of company that I work with, just on a larger scale, an large industrial scale or government scale. So that's the type of company. But again, I don't know, other than the government contracts, what gives them a moat over other companies like this. All right, that is really it on this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. Let me know what you think of KBR. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like KBR you'd like me to cover in the Stock Pick of the Day series, drop it in the comments. I'll try to work it into the rotation. I'm always on the lookout for new companies that a lot of other YouTubers may not be covering, because I like to bring you guys some other options out there. If everyone's investing in the same thing, it's hard to beat other investors with your investing strategy if you're all invested in the same stuff. But I mean, that's just the nature of it. The word gets out and people start looking at the same things, I guess. But I like to look out in other places. So if you have some interesting ones that maybe some other people aren't talking about, let me know. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. So I'm only sharing my opinion. Investing in educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. And for those of you who have made it to the end of the video, really appreciate you watching to the end. Don't forget to hit that subscribe button if you haven't. Share with anyone you think might find value in the content. Drop a comment. And don't forget to hit that notification and thumbs up button on your way out. Thanks again for watching to the end.